Okay, welcome to the Swing Trading with Cycles channel. This will serve as a preview for anyone who's new to this channel, just to give you an overview of what we cover. And so just a quick background, I started posting on Twitter about December 2020, and it wasn't until the earlier this year, so January, right around here, this is a chart of the S&P. It was like right around here where I started posting on Twitter, so like mid-January. And you'll see a link in the description for video on around January 21st where I do my first Cycles 101 that also happens to cover off on the early part of this downtrend in the S&P, right? So I've been documenting this for a little while, and I'll say on this channel we cover just about everything. So general equities, and this is just a smattering of some representative examples, but U.S. stocks, so that's S&P, QQQ, IWM, etc., Dixie and some other currencies, precious metals, uranium, crypto, crude oil, some individual stocks, commodities, U.S. bonds, cannabis, international. It's something I haven't done much of, but we'll start potentially, and we'll see how much we'll want to expand. And everything is organized by playlist as well, so you can easily find everything. What I'll say is you'll want to get yourself acquainted with two really foundational videos in a specific order. So you want to watch the video about swing highs first, and then the video about swing lows next. So the swing highs video tells you how to identify a market top, and the swing low video tells you how to identify a market bottom. And so you should see something in the upper right hand corner giving you an opportunity to look at that playlist, which has both of those videos organized. You'll also see a link in the description and a card at the end of this video, so that's easy to find. That's going to help you understand the framework that everything on this channel works on. Right. What I'll say, though, in general is that all of this stuff is only half the battle, right? Understanding this stuff with precision gives you a fighting chance to then be able to, basically maximize your profits in the markets. But that's not all of it, right? Like, the other piece of it is the psychology of it all, the risk management, which I would argue is actually more important. That's when you'll really be able to maximize those gains. So keep that in mind. This is not everything, and thinking that it is a very naive approach. But I was definitely there myself. I've been doing this for over 16 years. I've made a ton of mistakes. This is helpful for me, clarifying my thought process as I put it down on paper and out here on these videos. And so about this channel, again, we cover all this wide range of things. And so as a corollary to that, we really don't focus on fundamentals. I'll say the only fundamental thing you'll see me talk about is market cap, because that is important. If a company has a really small market cap, that means it has a larger potential to increase, right? A $1 billion market cap has a lot more upside than a $100 billion market cap, all things being equal, right? Assuming the same TAM, assuming the same, total addressable market. And so definitely appreciate comments about fundamentals in the comment section. You can have a discussion amongst the community, because I will say, I don't think fundamentals don't matter. A lot of chart trading people say, oh yeah, I don't care about fundamentals. I think fundamentals are great context, right? But I'm not going to be, I'm focusing on the price action to be my guide. The fundamentals, those are just context. And there's no way I'm going to be an expert at all these things that I'm covering, but price action works across all of them. That's the other thing to keep in mind. Price action is universal. It's not asset specific. And so the other thing I will call out is that I go through cycles on this channel, but it's really about price action. Right? The price action is what allows you to consistently time the market without predicting it. And what I mean by that is you can use price action to tell you what is happening right now. And based on what's happening right now, that gives you a sense of what is likely to continue to happen in the future, unless there is some kind of reversal against you, right? For example, if the daily chart is red, the weekly chart is red, the monthly chart is red, the quarterly chart is red, the yearly chart is red, where do you think price is going? It's literally going lower, literally in real time right now, and it's lower on all the higher time frames. So it doesn't take a rocket scientist to say it's probably going to continue to go lower, unless, again, there's some kind of violent reversal. And that's what we learn to spot on these channels. Again, those videos are invaluable about understanding the interplay between swing lows and swing highs. And on that point, I will say the entire market really just swings from, no pun intended, I should say, moves from swing low to swing high to swing low to swing high to swing low to swing high, endlessly across all time frames. Like, that's the whole ball of wax. Now, that's a very simplified way to think about it. It certainly doesn't make things easy. Simple isn't always easy, but simple is straightforward and it's effective. And that's the way to start thinking about it. Again, you watch those videos, you'll start to see it. It should become very clear. It's all just a series of swing lows to swing highs to swing lows. And our job on this channel is to try to get in as early as possible after that swing low and try to mitigate risk once we've spotted the swing high. That's the key. That's how you maximize returns. And so the last thing I'll say is that I take a very data-driven approach. And so I'll just run through a few things, like what I mean by that. So first off, everything that I do is based on open, high, low, close data. So this is in a spreadsheet that had, like, the good way to think about this is that every candle is just a visual representation of this data that's in the spreadsheet. So open, high, low, close. And this also has volume. Any indicator you can ever think of, a moving average, any momentum oscillator, it's just using these 5 inputs: open, high, low, close, plus volume, right? And so you can do this analysis in a spreadsheet, and that's generally how a computer program might do it. For us as human beings, it's just easier to see the pattern, to see the pattern like visually. And so these candles are just a visual representation of that. That's super important to understand. And so on that note, I'm pretty minimalist about indicators. You will see I use a moving average, for instance. That's just a visual thing. It's just helpful to see if something is above or below a moving average. But the moving average is slow. It's lagging. If you're watching the trend, that's going to tell you sooner. That's going to get you in the trade sooner or get you out of the trade if you want to mitigate risk sooner than waiting for some moving average crossover. If we think about trend lines, it's a similar thing. Trend line is usually going to be late. You'll usually have a lower low before you break lower below a trend line. You'll usually have a higher high before you break above some kind of resistance trend line. And I'm thinking specifically of those diagonal trend lines. Obviously, a vertical trend line is really just looking at OHLC, open, high, low, close. And so those do make sense. It's not really a trend line, if anything. I don't use any fibs, no Fibonacci numbers, like because that is not data driven. It's funny, people use the 50% retracement. That's not a Fibonacci level. That actually does make sense, though. It's like if you had a move higher of $100, then it kind of makes sense. That 50% retracement would be, $50, like halfway through the move. It makes sense that price could aggregate in that zone. But the other Fibonacci numbers, like Y38.2 and all that, like I just don't really buy into that stuff. And finally, classical chart patterns, the head and shoulders, the cup and handle, all that stuff. At the end of the day, every single one of those is just another representation of a swing low or a swing high on a higher time frame. That's it. Every single one. I'm not even qualifying that as like some of them and maybe all of them all the time. That's literally how it works. And again, watch the video, especially about swing highs. You'll see clear as day. Any head and shoulders pattern, for instance, the head is just a swing high, right? And the two shoulders are just lower highs next to the swing high, right? That's all they are. And if you flip it on its head, that's the same thing for an inverse head and shoulders, where, again, that inverse head, or whatever you want to call it, is your swing low. So that just helps you simplify it. And once you're looking at multiple time frames, you're all of a sudden able to kind of reduce the noise, and you don't have to kind of wade through all this muck almost. So that's the intro. I tried to keep this video as short as possible. This is a really helpful primer as you dig into the content on this channel. There's a ton of content, a ton of alpha here. Thank you for joining me. And I'll ask if you could please like the videos, especially if you find value in them, obviously. Subscribe, hit that notification bell. All of this helps the algorithm, helps to bring this to more people. So again, appreciate you, and always appreciate feedback in the comments section. Thank you.